welcome to this explainer. Look, if you're navigating the wild world of polymer pricing, you know firsthand how insanely fast things can flip. Today, we're unpacking the absolute latest, highly anticipated data on BOPP film pricing shifts and laying out some must-know procurement strategies for the first week of August 2026. This intel comes straight from Polymer Bazaar's weekly report, and we've mapped it all out to give you the clearest possible picture of what's literally happening on the ground right now. Let's get right into it. So let's tackle the elephant in the room, the single most urgent question on every buyer's mind right now. Given how fragile the market feels today, are these recent BOPP price hikes actually sustainable, or are we teetering on the edge of a sudden price crash? Honestly, every single purchasing decision you make this week hinges on this exact question, so we really need to dig into the numbers to find out. Section 1. BOPP Film Pricing Snapshot. To truly grasp the stakes here, we first have to look at the current reality of the numbers coming out of Sundrinagar. And wow, there is a serious tension in the market right now. If we look at BOPTT, specifically that 31 to 50 micron category, there's a really noticeable gap. The official company baseline prices, they're sitting at 179 to 180 rupees per kilo. But if you check the open bazaar rates, they're actually quoting higher, around 181 to 182 rupees per kilo. That disconnect between the official company line and the elevated street rate tells us exactly how much immediate pressure buyers are facing. Now, here is where it gets super interesting. You'd probably assume that with PP feedstock costs being so high, the producers must be really feeling the squeeze, right? Well, actually, scratch that. The data shows the exact opposite. Despite those high feedstock costs, the operating conversion margins for BOPP film have hit a year-to-date high. That's huge. It means current operations are insanely profitable for producers right now. They're basically making fantastic margins despite the tough environment. Moving on to Section 2, breaking down the hikes. So how did we even get to these peak prices? The market definitely didn't just casually drift up here. It was pushed, and aggressively so. We're talking two steep back-to-back price revisions implemented literally just days apart. The first major hike landed on July 27th, and then, boom, almost immediately after, a second hike hit on August 1st. Let's break down the actual numbers on those hikes, because the aggressive scaling here is the key takeaway. On July 27th, TT went up by 5 rupees, and NTT went up by 6. Okay, fair enough, but just days later on August 1st, TT jumps another 5 rupees. And look at that NTT category, it spiked by 7 rupees. I mean, that is an incredibly sharp, aggressive increase squeezed into a tiny window of time. Which brings us to Section 3, the monsoon demand disconnect. You know, with prices shooting up like that, you'd totally expect booming demand to be driving it, right? But no, there is a serious, frankly dangerous tension right now between these sky-high rates and what buyers are actually doing. Demand is basically paralyzed. Analysts are calling it a wait-and-watch mode. On one hand, these inflated film prices are making buyers super hesitant, and on the other hand, you've got monsoon disturbances physically slowing down the logistics of trade. So you end up with this wild contradiction. Supply has actually eased up, but demand is just crawling. Buyers are just sitting on the sidelines, waiting to see if these prices are going to hold or completely break. Section 4. The BOPP pivot strategy. Because of all this friction with BOPP, we're seeing a massive, highly visible shift in the market. Savvy converters are making a smart pivot over to BOPP films to keep their heads above water and stay profitable. Why exactly? Well, the data highlights 3 main drivers. First, the price differences are super noticeable right now, making BOPP a very attractive alternative. Second, converters are locking in much better operating margins. And third, they're seeing a lot more acceptance from end customers. It's basically a textbook strategic pivot to dodge the roadblock happening in the BOP market. Okay, Section 5, optimizing your procurement. Look, understanding the numbers is great, but it's only half the battle. To actually protect your own wallet in this kind of volatile environment, you need to change how you operate, and you need to do it today. Based on the intelligence, here's the official 3-step playbook you should be deploying right now. Step 1, maintain only your necessary stable stocks. Just keep enough on hand to run your production without a hitch. Step 2, liquidate all your excess inventory immediately. Do not be left holding heavy stock in a market that could turn on a dime. And Step 3, use a smart, strategic mix of company and open market procurement. By mixing up where you buy your film, you actively dilute your price-related risks. Section 6. Real-time Polymer Bazaar tools. To pull off that smart procurement mix we just talked about, you absolutely need rapid, real-time market intel.
Yesterday's data just isn't going to cut it. But you can get an immediate edge by using Polymer Bazaar's AI chatbot. It is ridiculously easy to use. Just send a WhatsApp message with the word BOPT to their AI bot at +91 93746 24365. That's it. In literally 5 seconds, you'll get a detailed automated report sent straight to your phone. It's a total game changer for getting the instant data you need to outmaneuver sudden market shifts.
Also, if you're looking to execute domestic buying and selling leads across India at the absolute best rates, you really don't have to navigate the open bazaar completely blind. Polymer Bazaar has dedicated relationship managers ready to help you out with BOP film, PP, and packaging polymers. You can easily call or WhatsApp them directly at +91 93138 24365 or +91 93754 24365. And finally, I want to leave you with this one provocative question to chew on as you map out your procurement for the week. With margins hitting a year-to-date high, but buyers completely stuck in wait-and-watch mode, this market is balancing on a knife's edge. So will geopolitical developments, some unexpected special discounts, or maybe even an internal price war suddenly shatter this fragile setup? You have got to constantly watch for any signs of raw material softness. Because honestly, in a market this precarious, a sudden price crash is always just one geopolitical shift away. Stay sharp, use your tools, and guard that inventory. Thanks for tuning into this explainer.